we're we always try and negotiate my buyers that the seller pays for the home warranty. But when you work with me, if the seller doesn't pay for your home warranty, I will buy your home warranty. I will not let an escrow close without a home warranty.
That's great.
It's, well, because I mean, that first year, I bought a house, bought a little rental house. Within a month, the water heater caught on fire. And my realtor, back then, this is before I was a realtor, my realtor had bought me a home warranty. And I never forgot that. I got a brand new water heater.
Oh, wow.
And I never ever forgot that. And so it's something that I provide as a service to all my clients. If I represent a seller, I buy the home warranty for the buyer. So I think that's it. Do you have any questions? Okay.
Thank you, Janet.
You're welcome.
Very informative.
Since we're on, am I next, Janet?
Yes, you're, oh, sorry. Next slide.
So I worked with Janet for over when she started 13 years ago. You know, your realtor is part of your family, you know, and that's when Janet becomes your friend, family, and some people want to try to go, well, I want to do it for sale by owner. I want to list this myself and do it, you know, and those, if I'm trying, you know, we get calls a lot saying, hey, we want to list our house ourselves because we're the escrow company. How do we do that? We say, you know what? You have to hire a real estate agent to help you. So it's all about, you know, writing the contracts. Very difficult. You get a lawsuit. You guys have one of these handouts here, a buyer's and seller's guide. You don't have to look at it, but this covers everything about the title and escrow process. You know, how to read a preliminary title report. So I'll just go over briefly what title and escrow is. We insure the property for life. Once you buy your property, you get a policy of title insurance which covers everything on that property for the entire time you own it. It's a one-time fee. You don't pay it monthly, you don't pay it yearly, you only pay it one time at close of escrow. Our average fee is about $1,200. So it's a reasonable price for getting an insurance policy. When Janet writes up the contract, when you guys find a house that you love, Janet writes the contract, and then she gets an accepted offer, then she calls me, and we open escrow. We issue an escrow number, and the first thing that we do is start working on the preliminary title report. Once you receive your preliminary title report, that shows everything of record on the property. Property taxes, if they're paid, if there are CC&Rs on the property, if there are mellow-roos on the property, and then we get into easements. If there's any power line easements on the property, it's going to be shown. Here in Pollock Pines and in El Dorado County, South County, if you're looking in, you know, in South County, there's a lot of easements, there's rivers going through the property. What my title department will do is issue a color-coded easement map. On that map, it'll plot out every easement of record. We'll color-code it so you know what's going on in your property. So then the easements are shown in the prelim, and then whatever's of record. But then we get into the deeds of trust. A deed of trust is a loan that the seller has. We're going to pay off that deed of trust in escrow and give you clear title. You know, clear title is what's very important. So it's just a peace of mind, really, Jeff, right? When you have title insurance.
You have to take title, clear title, right? So, you know,
You want to make sure that you don't
there could
have
be
someone
no
else's
cloud
liens.
Yeah.
on title
You know,
as
that
to
someone
who
else
owns
has
this
access to your
property,
property.
right? So that's what this is doing, is it is giving you full title to that, which is ownership. Title is ownership. If you have title on a property, you own that property.
Exactly. So you're going to want to find out how you want to hold title. So title is the vesting of the property. You could hold it as joint tenancy, which is probably the most common. Community property. If you're going in on the property with investors, you can hold it as joint tenancy, or no, tenants in common. And my wife and I just recently put our property into a trust. So I drafted a grant deed, We went from joint tenancy into a trust, so it's important.
So what's the difference between joint tenancy and tenants in common?
Okay, so joint tenancy, good question. So joint tenancy, if I pass away, there won't be a probate because it goes to my wife as surviving joint tenant.
Now, if you're tenants in common, what happens if you pass away?
You have a specific amount of interest in the property.
Correct.
Right, so
Okay.
if there's 10 owners, you have 1/10 interest.
Mhm.
Simple as that.
Yeah, so there might be a probate situation.
So say you're divorced and you remarry and you both have children from your previous marriage and you get married, and you purchase a home together, and you want to make sure that each heir inherits properly, would you do tenants in common then?
Oh, I would have to look at that.
I doubt it.
Okay.
It's not, I mean, probably not. You're probably going to just do joint tenancy
Okay.
because you're
Yeah.
married to that person. And, you know, if you die, do you want them to sell the house and give half of that money to your kids or their kids?
Okay.
That's something
Just
that you-
curious.
That's something that you'd probably discuss, and then you would probably have a will that
Right.
would describe what would happen next.
So if Janet is showing you property and you're questioning what's going on in the property, you're looking, even without having a contract, you can call me and I can get you all the information on that property, easements.
They provided me a preliminary title report by the next day, even by the end of the day, in the morning. I could have that preliminary title report by the end of the day. If you're curious about liens or anything, easements, anything that's recorded on that property.
So I'm with Fidelity National Title. I have an office on Main Street in Placerville. I have an office in El Dorado Hills in the town center. I have an office in Folsom on Iron Point Drive. We're the largest title insurance company in the nation. I've been with this company. I've only worked for Fidelity for 26 years here in El Dorado County.
Aren't
Well,
you guys
thank you so much, Pete.
Fortune 500?
Fortune 290.
Fortune 290? They're number 289.
Very professional company.
Yeah, Fidelity.
I've really.
Thanks,
enjoyed
guys.
working with them.
And I just want to say that
Are you hanging around or are you going to leave?
well, I want to save the best for last.
He wants to have a sandwich,
I want to listen to you, but.
but it's Shad's
Hello.
turn.
I'm Shad Peerman.
That's your name.
Oh, he has a question for you, Pete.
Yeah.
Who?
Oh, sorry.
Okay, I'm looking for USDA loans, okay? Are you familiar with them, propose them,
Say it again.
and USDA, are you familiar with their process?
Oh, yeah, well, we do that all the time, absolutely, yeah. And Jeff would know, Jeff will talk about those.
Yeah, Jeff worked for
yeah, we-
USDA.
We would close that escrow, no problem, we would just have to pay off that loan. If that seller had a USDA loan on there, we would get a reconveyance and clear title and pay that off. Yeah.
I was gonna say, that would really be a good question for you, right? USDA's and FHA's.
I have my little,
He'll cover that in just a
In
moment.
just a second, we'll talk all about that. Mine's gonna be a little short and sweet to the point. When you guys are buying a new home, these are obviously the 4 people that you're gonna be dealing with mostly. I was asked to speak today because I work for a tax law firm that helps people do back taxes to the IRS and to the state. I've also helped prepare and file taxes and do that previously in the past. So there's obviously a little bit of a benefit to, when you're finally a homeowner where you can actually, tax benefits where you actually get money back. And he'll talk a little bit about interest on mortgage payments and stuff like that, but that's things that you will, as a homeowner, get to use when you start filing your taxes as getting money back. So you also get to write off your, property taxes as well. So I don't know if you guys are, how familiar you are with preparing and filing taxes and all that, but pretty much everybody's like, oh God, they kind of roll their eyes about taxes. But this is a huge benefit for you guys when you finally do decide to buy your first home. The big thing I talk to people about up front is a lot of people, if they haven't purchased a home before, the first thing that's going to happen is you're going to talk to your loan officer and he's going to run your credit. And if all of a sudden you got any sort of tax liens hanging around back taxes that you might vote the IRS or the state, that could be a huge hiccup. That's going to be a problem because a lot of lenders won't want to loan you money if you already are going in the hole. If you owe 10 grand, 20 grand, 50 grand, whatever it may be, that's when you would call me. So I would come into play to help you get that cleared up hopefully in a timely manner, so that way you guys can keep on with your home buying process. Because some people are not only embarrassed, or they might not know, they don't know, you know, because if you haven't ran your credit or tried to ever purchase a home before, stuff like that pops up. So if that ever does arise, I'm the guy you would call and I would help you out. Otherwise, that's really about all I have to say.
You have to be careful if you're looking around for a tax attorney, somebody who can help you in that situation, because aren't there a lot of, you know, shysters out there?
There is. So you obviously are going to look for a credible company to help you. Somebody that's a true tax attorney that can actually get in there and get it done for you. What she's referring to is a lot of people hear the advertisements on TV and radio, hey, you owe back taxes, call us. More than half those companies are scams. They just want to get money out of you. They're not actually going to help you. So I tell everybody, do your due diligence, do your homework, do your research.
If you look on their website, they're got a rating with the Better Business Bureau.
A+.
So yeah, they're on the up and up.
There you go.
And your office is where?
Based out of Fairfield, but I'm here local, so if you guys are local as well, I even rent a little spot from Sunshine Train One, a little cubicle down there so you guys can see me
That's
there.
how we met.
If you know anybody who has tax issues, have a call, Shad.
Absolutely.
I have heard
They
it
have
on-
a person in mind.
Really?
Credit card in.
I have,
Well, they had a
You're gonna need to write down his number
Is that
though.
a card, Chad?
I've heard him on the
order new
phone.
cards
I've
and they
heard him on
send me
the
the wrong
phone,
one,
and
so I
he's
actually don't, but you
telling
can
me.
write my direct number down, it's right up there. And you call me anytime, or you can hand my number off and say, hey, give Shad a call. I do free
If you
consultations over
lose
the
it, call
phone.
me, I'll get you his number.
Yeah, so that's about it. So,
Thanks, Shad.
yeah,
Thank
you're
you,
very
Shad.
welcome. Yeah.
Thank you, Shad. It's Shad, not Chad, by the way.
Well, she said she lives on Shad Way.
She lives on Shad Way, Shad like the fish.
Yeah, it's a fish, so if you guys fish at all, that's where I'm
Janet,
at.
where's your office located?
My office is at the corner of Ridgeway and Sly Park Road, right at exit 60.
Are you the number one in the office up here?
So you have.
You know, I think we are.
No, that's my
I really
direct line.
do think we
You
are.
call me anytime.
I never
Yep.
look at the ratings and the rankings and all of that. It's because to me, real estate is not all about how much you can produce. It's the quality of what you do.
Yeah.
So, I mean, I am definitely not the highest producer here in El Dorado County or Pollock Pines, but I am a very detailed, service-oriented realtor.
Which is good.
You got all that down before I switch the slide?
Yeah.
Okay.
Is it my turn?
It's Jeff Kliewer's turn.
What's your last name?
It's Kliewer.
Kliewer.
So I know it's spelled goofy, but all you have to do is remember Leave It to Beaver, and that's me. I was Beaver Kliewer. when I was
It's
in
German,
college.
right? Isn't your last name German?
It is. I still have college buddies from years and years
Thank you
ago
so
when I
much,
was
Shad.
actually in college. They call me Beaver. What do you do?
Sure.
She sold the home last year and he took the 10,000 return rate on.
Abercrombie.
She was about 25,000.
Yeah.
You got it.
My Mary
That's what I do all day long.
All right.
Will Hyde.
I'll take care. All right, Jeff.
Will Hyde.
Yeah, it's a German.
Take care.
That should be.
I took
It is. It's
German
great.
in high school, and you pronounce it the way it's supposed to be pronounced, because you always pronounce the, if I or E or, anyways, I'm sorry. All right,
Yeah,
enough about your name,
So there
Jeff.
are two languages in the world where V's and W's are interchangeable, right? So it's Hawaiian, right? Hawaii is really Hawaii. I lived in Hawaii for a year, that's why I know. And of course I have a W in my name, so it's Cleveland. And I'm not really German, I'm from California. I was born and raised in Sacramento mostly. I started doing mortgages in 1991. So when I was 25 years old. So how old am I now? I'm old.
Old.
Yeah. So
70.
exactly. No, I'm 28 years old.
I say too.
The two things that really are critical that Janet was saying is the process is pretty complicated. I mean, mortgages are a necessary evil, let's just say it that way. I mean, you got to have one if you don't have $250,000 lying around, in a bucket somewhere. So when you're going to go buy a home, you're going to get some financing somewhere. The misconception, I think, for people in most cases that I hear is, Well, I don't have a lot of money for a down payment. That's empty. This one's empty too. I don't got anything. What do I do? He's talking about USDA loans. We're talking about you and a VA loan, right? So both of those loans are very similar. They're government programs along with FHA. So there's FHA, VA, and USDA. I like to kindly refer to USDA as a meat loan because, right, they give you the USDA stamp of approval like you get on a steak, right? Meat loan. It's not really a meat loan, but USDA loans and VA loans both go 100% financing. 100%. That means no down payment. Does that mean no closing costs? No. We gotta pay Pete. We gotta pay for those inspections. We gotta pay. Gotta pay me, right? I mean, whatever our junk fees are, which are just kind of like admin and processing and an appraisal fee and stuff like that. However, I have a customer right now who's buying down in Placerville. She's doing a USDA loan. She doesn't have $1,000 in the bank. She doesn't have $1,000. So how in the heck are we going to close this lady? Well, what we did was we asked the seller to pay for closing costs, right? So she might go offer that seller $255,000 when he's asking $250,000, and please give me $5,000 for closing. Net to the seller, right? He's getting what he wants. She's getting what she wants. So as long as the home appraises for the $255,000, she gets $5,000 for closing costs. She's going to walk into escrow next week with 0 cash to close. Pretty amazing. Totally doable. It's done all the time. VA can be exactly the same way. It's 100% financing. All government loans have mortgage insurance. Something that doesn't benefit you at all. It benefits me, the lender. If you're going to default on a loan, the guarantee fee gives me some of my money back.
Jeff, you only have to pay mortgage insurance if you put less than 20% down.
Correct. All right.
So that's your goal. You want to try to get 20% down.
Yeah, if you can, but I mean, that's completely unrealistic for most people. So
Right.
most people are going to end up with a
In the old
mortgage insurance.
days, you used to, the house appreciated 20% more.
Right.
You'd have to go to a FHA appraiser,
Yes.
and they should appraise your house and say,
Correct.
yeah, it's now worth, this is the day we bought $60,000 homes.
So
It's now worth $100,000.
a few things have changed on that front, right? So all government loans now, VA, FHA, and USDA, they have MI for life. All right. There's MIP and there's PMI.
Right.
PMI is private mortgage insurance that you get with a conventional loan. So say you go put 3% down or 5% down, you get a conventional loan with mortgage insurance. The mortgage insurance contract is 2 years. All right. After 2 years, you can call that lender and say, I don't want to pay anymore. My house is worth more money, and they might agree or disagree. They might hire an appraiser, but you can literally fight them. After 24 months, you can say, I don't want to pay that anymore because it is a 2-year contract for private mortgage insurance. FHA, VA, and USDA, you have it forever. They will not take it off. It's part of their program. They're guaranteeing the loan, because that's a government program, so you're going to pay a little freight every month into that payment to pay them. The only way to get rid of it is, hey Jeff, my house has gone up 200 grand, let's refi into a conventional loan and get rid of this mortgage insurance. So that's what you would do. Obviously, interest rates play a big part of that, because if you were to say you got an FHA loan today at 3.75%, right? That's about where those rates are today. You got a pretty good darn rate. So say you bought that house and you lived there for 2 or 3 years and the value went up a couple $100,000. Well, okay, so what's the offset? I'm paying, say, $125 in mortgage insurance a month, or let's say $100. Well, now rates are 7%. So I'm switching a 3 3/4 deal for a 7% deal. Well, it's going to cost me more per month. I might as well just keep the PMI, right? Who cares, right? I'm going to keep that low interest rate. Well, if rates were at, say, 4%, then it might make more sense because you're going to save the money on the MI you don't need anymore, right? So it's just something you'd want to call me and we would want to crunch the numbers and see how that works.
Hey, Jeff,
Yeah.
I have a mortgage calculator here.
Yeah.
And for a home price, if you guys purchase a home for $325,000, your monthly payment, including taxes and insurance, is going to be $1,800. That's out the door. That's at 3.875 interest rate. And this is putting 10% down. your mortgage insurance is gonna be $129 per month.
That's a lot, right? That's a lot. So I mean, that's part of the power
It's
of
like how
buying.
much, 1,000 something?
So-
1,800.
You're buying a house for $325,000, your monthly payment, with everything, is $1,800.
Right.
So that's better than renting,
Does taxes and insurance too?
totally,
Okay.
everything.
Well,
It's the same as renting.
it's not the same as renting. Here's the difference between
It's the
renting
same
and buying.
price as renting.
Correct.
Sure,
Yeah.
rents are gone their way up. Good luck. If you want to rent a place around here today,
It's ridiculous.
You cannot
And
find
people
any-
are lining up around the block. for
there are
it.
places there, I mean, like one-bedroom studios in Placerville rent for $12.50 a month. I mean, we're talking living in a box
I've
for
got a
$12.50.
925 square foot, 3-bedroom home in Diamond Springs, rented out for 1,400, and I had people lined up for it, lined up.
It's
And
nuts.
I could charge more.
But as we know, what's the difference between owning and renting, okay? So there's parts of a mortgage payment. There's principal, interest, taxes, and insurance, right? So let's talk about the first two things, principal and interest. Principal is like a bank account for you. Every time you pay down the principal on that loan, it's like putting money in the bank, right? $500 went into my house, it's worth $500 more because I've paid the actual loan portion of it down. The interest of the loan is what you give to me, the bank, right? The bank gets the interest. Banks are big and shiny. That's why they're big and shiny. They make a lot of money on those interest payments. Interest is front loaded, and it's amortized over, say, you do a 30-year loan. So if you make your first payment on a mortgage today of, let's just say, I'll use $1,000 for an example. If it's $1,000, $750 of that is interest that went to the bank, and $250 is principal. It's about 25%. It gets a little more and more and more and more every time you make a payment. It's like 25.2%, 25, all the way till you make your last payment, when most of it is all principal and very little of it is interest. And banks do that because front-loaded interest makes them the most money, right? And most people loan for about 5 to 7 years. That's really the average. Most people don't have a mortgage for more than that. Rarely anymore do people keep a loan for 30 years and pay off their home and burn their mortgage. Remember, back in the old days, you used to have mortgage burning parties. I remember going to my grandparents' house when I was like 10, and they were having this big party. And what was it for? Burning our mortgage.
That's my goal.
I wish I could
They
do
literally
that.
had a
That's
fire
right.
pit, and they had the mortgage from Bank of America,
You do it. I
and they
wanna
brought
come
out,
to
and they
the party.
burned it, and we own our house reclaimed. People don't do that anymore. People will refi, people will sell, or move up. It's really very common to have a loan for, 5 to 7 years. Credit, very important. Big time important part of it. Like, so one of the things that I offer at Stanford that probably, I don't know any other lender out there does, is I do credit repair for free. It doesn't cost you a nickel. Okay, I run your credit, I look at it, I see if there's pitfalls, where they might be. We look at your scores, right?
Do they have to pay for the credit report?
No, there is no charge for credit at Stanford Mortgage, not ever. And when I do what-if scenarios and rescoring and all these other things, it costs us a lot of money, right? I mean, it costs it's about $30 a trade line per bureau. So if I wanted to rescore one trade line, it's about $100. And that would just be, say, like your Bank of America card was, misreported or something like that, and they wanted to fix it. And I wanted to rescore all 3 bureaus, it'd be about $100. None of that cost passes along to my customers, ever. But what I do is typically I pull credit, we look at it, we figure it out. One of the things that I try to do with every single customer, and I had somebody recently who came to me and we're doing a loan for them and their credit score was 679. All right, so these things are kind of tiered, all right? The better the score, the better the rate you get. When you see a rate advertised in the newspaper, or you hear that guy on the radio from Quicken Loans, this is Jay Farmer, 2.99%, that is for somebody with an 800 credit score that's at about 30% loan to value, and it's a no-brainer deal, right? But that's so far from reality, okay? The reality is most loans and most customers have what I like to call a little hair on it. There's always something there. There's something that's either the employment, the income, the credit, something along those lines, the assets, what's going on, to make the picture a nice, clear picture so my underwriter can go, yes, let's give them $300,000. Let's just give it to them.
Hey, Jeff, I have a situation where we're at the signing, and the customers are looking at the loan docs, and this is a Quicken loan, one of those rocket mortgages.
Rocket mortgage. Love rocket mortgage.
The buyers said, hey, this is not what I signed up for. My interest rate's not right. The fees aren't right. And there's nothing you can do. You're at the signing table. Well, I guess I'll sign because I got to get this closed. I can't stop now.
Yeah,
So
you can.
It's so important to use a local lender.
You can't stop. I had, Quicken, God bless them.
You can't stop that. What I'm saying is that you don't even want to get into that situation.
You don't want to get into it.
It's really important to have somebody detail oriented like Jeff too, because his job is to look at the paperwork and look at anything that might bring question marks to the underwriter. Because once it gets to underwriting, you want the underwriter to, like he was saying, to just say yes. So he's been doing this so long and does it so well that when he does send things into underwriting, the questions have already been answered. So
that's my job. My
Yeah.
job is to present a loan to an underwriter that they're going to just say yes. So I'm experienced enough where I don't want to say I've seen it all, but I've seen a lot, right? So I kind of have an idea of if I see something, how to address it, what's it going to take for this to make it smooth, so the underwriter's not out there going, what's going on, this is a, bad thing. But so like what Janet does is, of course, she writes the contract. When I get the contract, they send it to me, right? That's kind of my marching orders now. Marching orders. Here's my marching orders. What do I got? I got a price. I got a thing. I got money here. I got an escrow open. So I call the escrow company. They say, I need fees, man. You got to give me fees on this loan. They send me the fees over, and then I prepare all the paperwork, and we do what's called full disclosure. We sit down. I explain the process. We go over loan possibilities. We can look at all the different loan types for you, and I can run scenarios on all of them and show you the differences. Okay, here's what USDA versus FHA versus VA versus conventional, and we can see where it all kind of the money flows and what is the cheapest, really, because that's the goal. A lot of people come to me now and they go, she's a car sales guy deal, but and I don't sell cars, but I don't really sell anything, and I do sell customer service. But a lot of people come to me and they say, well, I'm paying rent, right? You're paying rent. How much rent do you pay? $13.50. Okay, so then they go, okay, well, I don't want my payment to be much more than my rent, right? That's what I'm looking for. So I can run numbers backwards. I can run those numbers completely backwards and say, okay, based on $13.50, I can tell you right now, about $260. They buy about $260 house right in there somewhere. Depending on the insurance, is a little bit questionable because, as we know, that's kind of an estimated cost. But that's something that you can look at, right? So people are always telling me, I don't want my payment to be more than X. Well, that's the number I work from, and then it's like, okay, well, here we are today, and so can you buy a house, right? So most people, you would think, okay, 250, 260, go look at the market. Janet gave you a list. There's not much at those prices. It's not much at
It's a
all.
little bit more in the 250 to 300 range
A little bit
over
more.
a few months
There's a
ago.
little bit more, which is good.
Mhm.
And I do think that there will be there's always opportunity as well. So the one thing, like I tell you, is you get pre-approved. I can sit there and run your credit, and I can run everything and all the numbers and put it together, and I can tell you with all the confidence in myself that I can get your loan done, all right? And that's great. But what we also do at Stanford is we submit to underwriting as a TBD, a to-be-determined property, right? So I can actually send you to underwriting with your credit, income, and asset profiles, get you completely approved by an underwriter. Now, you are shopping with full confidence. A, I can make the payment. B, I can do a short escrow now, so I can actually
Put you in a better
compete.
negotiating
When that
position.
house pops on the market, Janet, I like that house, let's go.
Yeah,
She could go out and write
there's
a
three,
20
there's three people writing an offer along with you.
She could write a
But-
20-day offer because
Right.
all we would need at that point is an appraisal, the prelim, and insurance, and we're done.
You've already been through
Right.
underwriting.
So that's
the key right
It's a
there.
huge value that we
Yes.
offer. And
How long is that good for?
90 days. It's good for, well, it's good as long as your credit report is.
Right.
Your credit's good for 90 days. That's basically it, and then they re-pull your credit.
Now, every time they pull the credit, does it ding the credit?
All mortgage lenders do a hard pull, so yes, it's gonna hit you for about 2 points.
So if you don't find a house for a while, then every time
What
they
it-
ding it.
In my little presentation there's kind of a 10 things of do's and don'ts, right? And once I pull your credit and get you kind of pre-approved and you're out shopping, let's say, if it goes over 90 days,